MSTY has mystified many people with its insanely high distribution yield, which stands right now at 90%, but it was even more than that at around 190%. While researching MSTY, I noticed a wide divergence of opinions on it. People either love it or trash it. In this video, let's take a look at under what scenarios MSTY will outperform. Also, I want to address major risks that MSTY investors should be aware of. Before I delve into MSTY, I want to address the elephant in the room, and that is Strategy Inc., or as it was formerly known, MicroStrategy. It's a software company. Well, it was before 2020, before it started delving into Bitcoin. Founded in 1989 by Michael Saylor and others, MicroStrategy provides enterprise analytics services. If we go back to 2019, MicroStrategy had about 2,400 people on its payroll, with about 500 million in revenues. But something happened in 2020. If you remember, back then interest rates were some of the lowest on record. For this reason, Michael Saylor pushed MicroStrategy into buying Bitcoin for better returns.
And the best way to do it is convert it into Bitcoin, because Bitcoin's going up more than 100% a year. Cash is debasing at 15% a year.
First, they started small and acquired about $250 million worth of Bitcoin. At that time, the idea of holding Bitcoin on corporate balance sheets seemed radical. Bitcoin institutional acceptance was minimal compared to what it is now, but in hindsight, it was genius. At first, MicroStrategy or Strategy used its own cash to buy Bitcoin, but after initial success, when Bitcoin price spiked over 5 times, Saylor got a new idea. Why not raise even more equity as well as debt and use leverage to buy even more Bitcoin? I mean, after all, cash can only take you so far in your investment, right?
No, I tell people we will be buying Bitcoin at the top forever. I'm not trying to time the market. I don't intend to stop.
With some volatility, luck, and persistence, Strategy acquired over 636,000 Bitcoins to date. It is worth over $70 billion as we speak. Over half of this entire Bitcoin pot got purchased in the last year alone. And that's where Bitcoin Treasury infinite money glitch comes into play. It's an engineering term, and it's not really a glitch or infinite at all. Rather, it's a flywheel effect. Strategy continuously raises capital to buy Bitcoin. For example, first they issue debt, preferred shares or equity, and then they take those proceeds and invest it in Bitcoin. And as Bitcoin price climbs, they can raise even more capital and buy more Bitcoin, and so on. At the end of the day, Bitcoin treasury companies all share one and the same feature, and that is leverage that they use to buy Bitcoin. So even Michael Saylor himself acknowledged and said once that Strategy basically turned into a spot Bitcoin ETF with a leverage. If we look at Strategy's balance sheet, it has a fair amount of debt. Most of it sits in convertible bonds and preferred shares. The good thing about convertible bonds is their convertibility. Also, they come with minimal interest rates. On top of it, at this point, most of them are convertible to MSTR stock, and they trade like MSTR stock actually. The other source of capital for Strategy is preferred shares, and that's what it has been using more lately. Basically, it's a preferred shares. It's kind of like a mezzanine debt that's above common equity but below like senior debt. And essentially, this debt comes with a fixed dividend rate, which lately ranged from 8 to 10% for Strategy. And what's interesting is that Strategy can pay dividends, those dividends in the realm of 8 to 10%, in the form of its common stock. So you can issue common stock and pay to preferred shares investors. Also, some of these preferred shares, they can be converted to common stock of Strategy. And finally, there's one last source of capital for Strategy, and it is issuing its common shares. But either way, we see that the cost of capital sets a hurdle for Strategy. Suppose that Strategy faces a cost of capital of 8 to 10% with a leverage of 2 to 4 times. Then Bitcoin must appreciate in the realm of 2 to 5% each year. Of course, the Bitcoin price does not happen on a smooth and consistent path. That creates a lot of volatility and up and down moves for Strategy. Some years could be bad, some could be good. All depends on the demand side for Bitcoin, since because its supply is pretty much fixed at this point. This is one important metric that strategy investors often use to assess where strategy stands, and it is called multiple net asset value or MNAV metric. MNAV takes strategy's market capitalization plus debt minus cash. Then you would divide that result by Bitcoin market value that strategy owns. Of course, strategy still has that software business, but it's relatively small, unprofitable, and inconsequential at this point. Most of the company's value firmly resides in its pot of Bitcoin anyway. So we have this MNAV metric. If it is greater than 1, it means that strategy trades at a premium to its Bitcoin holdings. In other words, if you buy MSTR stock at say 2 times to its MNAV, you will be overpaying for strategy's Bitcoin holdings. At the risk of oversimplifying, you will be paying like $2 for a Bitcoin worth only $1. If we look at how strategy's MNAV behaved, it was almost 3.9 times in November of 2024 at the peak of crypto optimism. Right now it stands at around 1.5 times. MNAV tends to fluctuate and spike around major rallies of Bitcoin. Now, of course, it's an oversimplified take on this premium, meaning that you pay more than $1 for $1 worth of Bitcoin by buying MSTR stock. The thing is that premium reflects all future rallies for Bitcoin. It also reflects Michael Saylor's ability to use leverage to amplify those Bitcoin returns. Again, it all comes back to the use of leverage. Now, leverage amplifies both gains and losses, and the worst outcome for strategy if price of a Bitcoin falls and stays down for a prolonged period of time. And that can happen. The price of Bitcoin fell by as much as 50% not long time ago. And I don't think necessarily strategy will go bankrupt, but it's a tail risk, but it's still there. Strategy's annualized interest and preferred shares dividends is about $200 million, but will probably be more if more debt is issued. But the beauty of this arrangement for strategy is that these expense can be paid off, partially at least, with common stock. In other words, strategy can issue common stock and doesn't have to use its cash to pay off its investors in debt or preferred shares. Issuing common shares is not costless. It creates dilution for shareholders. But at least when things turn for worse for strategy, the company won't have to pay cash, especially if it doesn't have it. Also, most of its convertible debt maturity is laddered across different years. This helps them too. Strategy also issued an updated guidance for issuing more common equity to finance Bitcoin purchases. The company will no longer issue common stock if its MNAV is below 2.5 times, but it will do so above that number. So, to summarize, strategy has turned itself into a leverage play on Bitcoin. According to Michael Saylor, that leverage is in the range of 2 to 4 times. So the best time to buy MSTR is around Bitcoin bottoms, or when Bitcoin is in the middle of a heavy rally, if it's possible to predict at all. If we look at MSTR stock and Bitcoin price, they do correlate, but not perfectly. The correlation since August 2020 has been roughly 0.5. That's not a lot. A lot of times other factors were at play here. On top of that, there are other Bitcoin Treasury players out there. They popped up like mushrooms after the rain. But none of them so far can compare to Strategy's size and scale. As it stands now, Strategy is the largest corporate holder of Bitcoin with 3% share. For comparison, Bitcoin ETFs hold about 7% of all Bitcoin potential supply. Public, private, and mining companies, including Strategy, hold about 7%. The max Bitcoin supply is, of course, 21 million coins. But keep in mind that there's a lot of lost or unrecoverable Bitcoins sitting in wallets. Some people just forgot their passwords. The lost Bitcoin amount could be 10% or even more of the total supply by some estimates. Okay, so that was a bit of a lengthy digression on strategy, but it's an important one. You must be bullish on Bitcoin long term, otherwise there's no point of investing in MSTR or MSTY. Also, you must have at least some faith in Strategy's financial engineering and its ability to execute on it and amplify Bitcoin returns. Next, let's start with MSTY investment strategy. Of course, MSTY is a one-stock focused ETF with derivative overlay for income. But MSTY is not holding strategy stock directly. Instead, it relies on synthetic positions. Synthetic positions entail buying call and selling put options at the same time. Both put and call must have the same expiration and strike price. For instance, we see them highlighted in yellow right here. Now, synthetic position, as opposed to owning strategy stock directly, come with a few costs. First off, you have to trade them due to rolling them over into a different strike price. And as a result of that, there's some trading cost, which is separate from fund's expense ratio. And by the way, MSTY's expense ratio is 1%, which is quite high by the standard of derivative income ETFs. At the same time, these synthetic positions are collateralized with Treasury bonds. We see them highlighted in green here. This helps MSTY somewhat offset the holding cost of their synthetic positions. Also, sometimes call options may trade at some premium when there is a bullish sentiment on MSTR. This may further increase their cost of synthetic positions. As for derivative income, MSTY holds covered call positions for the most part. They sell call options and get premiums that they distribute to shareholders. These positions are highlighted in blue here. But this income comes at the expense of capping MSTY upside when strategy rallies. For this reason, the fund does so-called credit spreads, meaning they also buy at the same time deep out of the money call options. They are highlighted by red here. By doing so, they can take part in upward moves and mitigate those upside caps from covered calls. One of the main reasons why MSTY goes after MSTR stock is its volatility. The 30-day implied volatility for MSTR stands at around 60. This means that MSTR stock can go up by 19% in the next year, but it can also go down by 16%. High volatility stocks are like two-edged swords for covered call funds. High volatility means more premium income, but it also means more downside and overall more up and down movements. When MSTR stock goes down, it does take MSTY with it. Now let's talk about distributions. They're massive. But are they sustainable? Net asset value or NAV erosion is a given for MSTY. And it often happens because, by law, MSTY must distribute at least 90% of its income on a regular basis. And as it often happens on a down days, the fund will dip into its capital. In other words, it will give your money back. If we look at MSTY price, it has been roughly down since its inception. It may recover though if MSTR skyrockets again. But if recovery is slow or up and down moves continue, you can certainly count on more NAV erosion. Now, this may or may not matter. If MSTR stock appreciates, then who cares? But what if not? Then distributions of MSTY will start to decline. In fact, they are declining. So if you're planning to rely on MSTY distributions in your retirement, in that case, reinvestment becomes a must. How much to reinvest depends on MSTY NAV erosion and your personal goals. If your goal is to have high, consistent and growing distributions, then more is better. Also, you must be okay with fluctuations in MSTY distributions. They are very volatile and can be unpredictable year in, year out. It all depends on the MSTR underlying stock performance and volatility. Now, most people would say, who cares about NAV erosion if I get 100% of my capital back? And so any other future distributions from MSTY counts as pure income. For that, let's check on total returns. Since its inception, MSTY is roughly 240% up if you reinvested 100% of your distributions. That's massive. This was largely thanks to that post-election rally. As expected, MSTY did lag MSTR stock due to its upside cap from covered call strategy. If we look at upside to downside capture percentages, MSTY behaved as expected. It captured much less upside than downside. In other words, when strategy stock price fell, MSTY fell by about 20% less. But when MSTR rallied, MSTY captured roughly 60% of that rally. This is very typical for derivative income funds, although I would say that the divergence for MSTY between its capture ratios is wider than I've seen so far. One counter-argument to holding MSTY is, why not hold MSTR stock directly? That way you can sell shares to create self-distributions on a as-needed basis. With that, you will be 100% in control of timing and taxes. After all, holding strategy stock has no caps on upside like what it's like with MSTY. If you're bullish on Bitcoin and strategy, this could be a viable option. For instance, if you withdrew 5% each month, you're still left with more money by investing in MSTR stock. Of course, these numbers ignore the tax side of things. Now, let's talk about taxation of MSTY distributions. If you hold MSTY in a tax-deferred account like 401k or IRA, it doesn't really matter. Everything that you withdraw from there gets taxed at your regular income tax rate. But holding MSTY in a taxable account is a different matter. There are three primary sources of income for MSTY. The first one is, of course, that net premium cash flow from covered call positions. The second one is capital gains or losses from those synthetic positions on underlying strategy stock. And there's also a third source of income, which comes from interest income on US Treasury bond holdings. When it comes to US Treasury holdings, that interest income is taxed as ordinary income. For instance, in 2024, interest income from government bonds for MSTY was negligible. But the first two sources of income matter most. First, income from synthetic positions is likely taxed as short-term capital gain. I say likely because it depends on the holding period. Looking at MSTY current holdings, its synthetic positions expire in less than a year. If MSTY rolls them over at a gain, the gain is taxed as ordinary income. If rolled over at a loss, the short-term capital loss is realized. Keep in mind that wash sale rules also apply to option trading for MSTY. So MSTY aggregates gains and losses from its covered call and synthetic positions. And at the end of the year, they report your distributions on your 1099 form. If the fund lost money but made distributions to you, all these distributions will be counted as a return of capital. And return of capital is not taxed. Instead, it reduces your cost basis first. And then after your cost basis reaches zero, then all those distributions, regardless whether they are return of capital or something else, will get taxed as an ordinary income. Effectively, return of capital turns your distributions into a tax-deferred long-term capital gain that will get taxed at a lower tax rate. Of course, assuming that you hold MSTY for longer than a year. MSTY does post 19A-1 tax forms for its shareholders. For instance, in August they reported about 60% return of capital. But this form is an estimate and is not what you will see on your 1099 DIV form. For instance, MSTY reported minimal return of capital in 2024. This was due to that massive Bitcoin and strategy stock rally that happened at the end of the year. It pretty much eclipsed everything else. MSTY probably realized massive capital gains on its synthetic positions, and in that case, most of those distributions got taxed as an ordinary income. And this makes holding MSTY in a taxable account not exactly tax efficient in that scenario. 2025 could be different though. There's a lot of whipsawing happening as we speak. Depending on how 2025 concludes on a net basis, return of capital is possible. Also keep in mind that with massive yield and return of capital, it may take a few years to deplete your cost basis. Then your MSTY distributions will get taxed as ordinary income. Overall, return of capital is not a bad thing if NAV stays intact. But if NAV erosion takes hold, distributions will start declining. If distribution growth is your goal, reinvesting is a good idea here. We see that MSTY has its pros and cons. It's a single stock fund, which is a risk. Many things will depend on Bitcoin price and where it goes from here. Also, it depends on Michael Saylor's ability to execute on his plan to leverage Bitcoin returns. Also, if MSTR stock declines or whipsaws, then distributions will also go down. And in that case, reinvestment, at least partial of your distributions, becomes a must. At the same time, if MSTR stock skyrockets to the moon, it doesn't really matter. In 2024, MSTR and MSTY had a very good run. That was exceptional. But as many times happen with Bitcoin, crypto winter or slowdown could be upon us until the next bull run. Proceeding with caution is a good idea here. And that's all for this video. I hope you learned something new today. Like and leave a comment if you learned something new today or have a question. Also, subscribe to my channel for more content on investing. I will see you next time. All the best!